What's up, guys? So obviously nothing really changed from my last video. I just wanted to make a quick weekend video, an update on where we stand in the market, probabilities real quick, and just reviewing the game plan for the rest of this year, which I think is very important to be extremely systematic, to just survive and not lose money this year. It's going to be an amazing buying opportunity afterwards. So as we speak right now, short term, obviously we're having a bounce in the S&P 500 and the broad indexes, which is great. I'm happy to see that because it was getting pretty bloody. The black line right here is the beginning of this year. So as I told you guys, this year was going to be very tricky, choppy, and yeah, that's kind of what's going on. As you guys can see, we've basically gone absolutely nowhere in the broad indexes. So right now we're bouncing on this key level right here, 586, and also we were in the lower range of the probability of distribution. So at the moment, if the probabilities do not change, the means, which is the middle line, is about 2% higher than where we are. So it would bring us to about 608 if we do continue pushing higher. So the fear and greed right now is at 20, which usually is an amazing buying opportunity, and based on probabilities we should have a nice short-term bounce. Put to call ratio, also beautiful spike here, so this is why I am expecting this short-term bounce to continue a little bit higher. We also have the VIX index, the volatility index, spiking as well. Looking at the smart dumb money ratios, if you guys remember, I told you guys that the money retail basically was capitulating at these lows when we called the bottom on this channel. Then we had this reversal, and I told you guys that they were chasing aggressively back in the market, and now retail is aggressively selling back again. So we're not near capitulation levels, but you can also see that the blue line, smart money, has been accumulating stock. Personally, as you guys know, I'm still medium term bearish because the weekly momentum is still negative for the broad markets. So we'll see how that plays out. At the moment, the broad sentiment in the market for investors is very bearish. So this is the bull bear ratio. And as you guys can see, we are now at buying levels. So right now, everyone is bearish, and the most investors are hedging themselves with puts. That's why the put to call ratio has had a beautiful spike. And those are the reason why I'm expecting a short-term bounce. So despite the fact that I am expecting a short-term bounce, I am still bearish at the moment because of two reasons. One, the weekly trend following momentum is still negative. So nothing changed on that regard. That's really what I'm just waiting for, to get back into positive, and then, I'll be bullish again for a short period of time. And then the second big reason is the market rotations right now going on behind the scenes are not looking good. What I mean by that is this is a screenshot of XLY divided by XLP. So basically in layman term, that's the cyclical stocks divided by the defensive stocks. And right now, if I zoom in here, you can see that institutions basically have been aggressively rotating into defensive stock, and they've been aggressively selling anything that's cyclical, basically meaning that they're no longer very bullish on the broad economy. And if you look at the purple line, which is just the S&P 500, you can see that we've basically just been going sideways. And that's how you can tell when a contraction pattern is distribution or accumulation. You can just look at very simple ratios to see where the money is rotating in. And right now, when we're going sideways like that, obviously someone is redistributing or someone is accumulating. The cyclical defensive ratio is saying that this is distribution, meaning that institutions are getting out of cyclical stocks. So now we'll have to see after this short-term bounce, is it going to be a dead cat bounce, or is it going to be enough energy to push back the weekly trend following momentum positive to then have another leg higher? And then the last screenshot, when it comes to market rotations, these are all the sectors you want to pay attention when it comes to, knowing if we're in a bull market or a bear market. And you can see that the semiconductors, the relative weakness started, a couple of months ago. So the S&P continued going up, but semis kept going down. That's not a good sign. Same thing happened here back in 2022. For a while, semis were going nowhere, and the S&P 500 continued, going a little bit higher, but then eventually it rolled over and it catched up to semiconductor. Same with tech as well. and consumers, right? So those are really the three sectors that when you start seeing them all no longer follow the S&P 500 and you're starting to see divergence, yeah, that's not a good sign. And then as I keep repeating, when you combine that with the negative weekly momentum, this is not a time to be a hero. You just want to be cautious right now. So short term, yes, I'm still expecting a bounce, but now I'm going to show you guys why bigger picture I would be very cautious with the S&P 500. And as I mentioned, I was very vocal since the beginning of this year that it was a good time to start, taking some profits in the market and, having 10 to 20% cash for the first half of this year minimum, and then 30 to 50% for the next half of this year. Not financial advice, I could be wrong, but now I'm going to show you guys the 6-month trailing Sharpe ratio of the S&P 500, and this is actually very accurate when it comes to knowing, is this a good time to buy the dip, right? So obviously right now, yes, on the short term, technically it's a dip buying opportunity, but bigger picture, you can see that we are extremely overextended in the Sharpe ratio, and every time that happens and we're in these higher levels, we tend to, have some big drawdowns in the S&P 500. So this is why I kept telling you guys that it was no longer worth it to be all in your long-term portfolio. When you look at bigger picture data, it just doesn't make a lot of sense, and that the risk reward was actually better to basically just take 10 to 20% profit, keep that money, in short-term T-bills, money market fund, GICs with the bank, right? So at least a GIC with the bank, you can't touch the money, you can't do anything stupid, you can just leave it there for 3-6 months with the bank, and then eventually when the bank gives you back your money, most likely the market will be at a cheaper price where you can then reinvest that money at better levels, in my humble opinion, not financial advice. So this is definitely something I will be keeping an eye and updating you guys as well on this channel when it comes to longer term portfolios. And at the moment, yeah, this for me personally, I'm not gonna chase the market at these levels, if that makes sense. So I also just want to show you guys the AAI allocation cash. So this is basically showing you how much cash most investors have in their accounts. And as you guys can see right now, we're still at really low levels. And you can see that when we actually bottom in the market, that's when most investors are all in cash and everyone capitulated. Right now, as I said, nothing really changed. Don't panic. We're barely down a couple of percentage. I'm just saying, bigger picture, start preparing yourself for that bear market. It's gonna come, but it doesn't mean it's gonna happen tomorrow. It might take a while, but it's going to happen eventually in the next coming months. And then the last data set I wanted to share with you guys is the stock allocation of investors. And you can see that right now, most investors are all in the market. They're all in stocks, So obviously when you see that most investors are all in stocks, they have low levels of cash. Sharpe ratio is extremely high. And my point is, right now, it's not the time to faffle, to F around and find out. So hopefully this helps. So before I talk about Bitcoin, I wanted to talk about, obviously, Tesla, my biggest fumble. We are seeing, for the first time in days, a green day. So finally, I didn't lose money for another day, right? So I just kept bleeding. This is insane. This was my best and worst trade ever. I'm still long. The thesis hasn't changed on Tesla. It's just Elon honestly has destroyed investor confidence. What he's doing makes no sense. And if he continues, as I said in my last video, it's not going to end well at all. And he could be ousted as CEO of Tesla. You cannot go from an advisor to public servant to then second vice president almost and still be the CEO of a public company. That's insane. And the problem with Elon is I don't think he's going to back down. And this is why right now I personally, for risk management, had to reduce my size despite the fact that I was literally buying the bottom. I called the entire move and then I took zero profit like a moron, and I lost more than 6 figures, right, of non-realized gains. So right now, I just wanted to show you guys that nothing changed for the key levels. For Tesla to maybe start a new uptrend, we're minimum gonna have to reclaim that 296 level. If we get rejected, next level is 248, 250, in that ballpark. And again, the issue is not the fundamentals of the company, it's not the technicals, it's Elon Musk, and that's a big effing problem. And this is why I would be cautious if you have massive size. This could be very ugly, especially if we do continue to go lower in the broad market. and you have Elon that continues going rogue, which I think he is, and that's my problem. This is why I reduced my size. I'm expecting him to continue going rogue. And then the question is, are you going to continue this for 4 years? I mean, what the beep are you doing? So that's a big problem, which sucks because at the end of the day, Tesla as a company, nothing changed. It's the most beautiful company out there when it comes to growth, innovation, and changing the world. And you just do quick Excel spreadsheet on the value of Tesla once they succeed with Optimus, and it's insane. It's a 5 to 10 trillion market cap company. The problem is, for a company to be investable, you need to have a CEO. And right now, Elon basically clocked out as the CEO of Tesla out of nowhere for the past 3 weeks, and now he's a public servant. This is crazy. So those are my thoughts on Tesla. I'm not going to be buying back, by the way. I will be waiting when Elon pivots, or if he doesn't pivot, this is going to end up extremely ugly in my humble opinion, and I don't think that a lot of long-term investors are realizing what I just said. This is just like Mark Zuckerberg in 2022 with Facebook when he kept doubling down on the metaverse, and so it didn't end well. The stock went down 70% until he pivoted. At the end of the day, the biggest lesson from all of this is the money is made when we're buying in the bear market. So this is why I'm still able to survive despite those massive loss of unrealized gains. I was buying Tesla in the bear months ago. I was buying Bitcoin in the bear market, Solana, right? The market as well. So hopefully, if you were to learn one lesson from all my videos, is that the money is made when you're buying during the bear market and no one wants to buy. And I remember when I was telling people to buy in 2023 Bitcoin, people were making fun of me. Like they were almost calling me the R word, like I was a moron, And then those are the same people that probably got back in at these higher prices. So lesson of the story is buy when we're in the actual bear market, and that I'm very good at. But taking profit obviously has been one of my biggest issue, and so this is why I've been coding relentlessly, obviously with AI, to create these profit-taking model based on the probabilities and momentum. And I will be sharing all of these, by the way, for free with friends and family at one point, probably in the next coming months. I'm still working on some new ones as well, so I have a bunch of other indicators also. So stick around. These indicators are going to make us a lot of money, man, like a lot. So for Tesla, that's pretty much it right now. I'm extremely bullish on the company itself and what they're doing, but Elon is destroying the stock, and until Elon pivots, in my humble opinion, there's going to be a lot of relative weakness for the Tesla stock. So I just wanted to move on to Bitcoin. On the short term, there is some good news. So obviously we had this huge drop. Like this is a massive drop. We even broke all the probabilities. This is how powerful these probabilities are, by the way, guys. You see how even though we broke that third deviation, we went probably to a fourth deviation right here. We rubber band snap back to that level. So you see that computers, they respect these levels, right? So this is why I'm pretty accurate at calling tops and bottoms. And you can also see we were completely out of the Z-score deviation range of the moving average. So we broke a fifth deviation. So obviously that's not a time where you want to panic anymore. I was warning you guys when we were at these levels that the momentum crossed, and that's exactly what happened. We had a huge drop. So now on the short term, the good news is the means is 12.29% higher from where the current level we are right now. Bad news is look at the market structure of the channel. You see how it's now in a downtrend? That's not good. So right now, stocks go up, sideways down, and the market structure now is down. The good news is both of my dollar cost averaging ratios for Bitcoin triggered a buy signal. So if you guys remember these ratios, they work very well for buying the dip. The problem is that using a DCA ratio works like magic when you're in the bear market. Right now, we're no longer in the bear market, and we're halfway, if we're lucky, in the bull market. So using a dollar cost averaging ratio midway a bull market is not gonna, change your life or give you these amazing entries like I was doing back in 2023. So do keep that in mind when it comes to Bitcoin. So yes, the ratios did trigger a buy signal, but right now a buy signal is not the same when you're at the beginning of a bull market or in the bear market. That's when you really want to use these dollar cost averaging ratio to get the best price. And then the second DCA ratio is this one, so it's very simple, just uses a 50-day breadth, right? And it did hit, and then I like when the other 10-20 breadth also coincides. So yeah, so we're at these levels where yes, I'm expecting a bounce. So we went to my first target. I told you guys that if we broke this level of 87, we would go to 70,000. We went to 78,000 before reverting on the short term, right? So right now we really need to reclaim this key level right here, 87. If we don't reclaim this level, this is just going to be a short-term bounce, and then most likely we'll go lower to the 71,000. I'm hoping we get a higher bounce. My covered calls all expired, so right now I'm kind of looking for a bounce to at least sell some new covered calls against my positions. And again, the weekly momentum is still negative as well for Bitcoin, so this is why for me every bounce is a short until the momentum turns positive. So I'm not here saying it won't happen, I'm just saying be cautious until it does. And then I just want to finish the video with my stop loss for crypto, guys. It's basically this volume weighted MACD on the monthly time frame, and my god, it doesn't look good. I'm gonna be perfectly honest with you guys, we're gonna need a miracle for this to bounce. So the next week, the entire market better bounce hard to push momentum back up, because if not, yeah, I will be reducing a lot of my Bitcoin. So hopefully this helps. And as you guys remember, I also told you that I do believe this cycle is different for crypto in general, and I just wanted to show you guys basically the past cycles. If you remember, I showed you these chart before. So looking at the past 4 cycles of Bitcoin right now, the red line is the cycle we're in right now, and you can see it's completely decoupling from the rest of the other cycles. So that is not good, with the momentum still being negative. And if we continue going just a little bit lower, then my stop will be triggered. So I just wanted to be transparent. I think that a lot of people right now are hanging on AST indicators that worked very well to call the top on Bitcoin, and this cycle could be completely different. Bitcoin might have, I guess, evolved, if that makes sense, into a new asset class. It's no longer a kid, and it's now, I guess, like a young adult, right? So it's probably gonna start following more traditional markets as well. All right, guys, so that's pretty much it. So recap, short-term bounce in the broad market, Bitcoin will most likely follow. Hopefully Tesla also has a little bounce as well to show a little bit of strength, at least to see if institutions are dipping the toes on the buy side. Medium term momentum is still negative for the broad market, Bitcoin, every single risk assets as well. So just be careful, don't fall for this short-term pop. Change my stance if the momentum comes back, but until then I'm being very cautious. So hopefully that helps. God bless you, have a great day, and see you in the next video.